You've heard from Andrew today on base metal markets, and my presentation today is going to focus more on the operations and, in particular, our business improvement initiatives and our focus on cost management. Our copper business unit currently consists and continues to consist of 5 operating assets, all operating in the Americas. And we have various projects also shown on this location map. The first 3 months of 2013 has seen revenues in excess of $2 billion in the copper unit, and gross profit before depreciation and amortization of about $1 billion. So it gives you a sense of the contribution from copper, and that's largely led by Antamina and Highland Valley. Before getting into the operations, I'll first take a look at our production profile, and this shows the profile by quarter for the last few years. Production was on a rising trend during the 2011-2012 period, and culminating in the second half of 2012, where we had a very strong second half and largely driven by higher grades at the Highland Valley mine. Our concentrate production levels are driven by numerous factors, and that includes ore grades and ore hardness, and that affects our throughput rates through our processing facilities. Both of these factors do fluctuate quite significantly quarter by quarter and year by year, and that really depends on what phase of the mine deposits that we're into at the current time. So turning to 2013, production was planned to drop from the record rates in 2012, and that's primarily due to declining grades at a few of our operations, and including some planned downtime at Highland Valley to tie in the mill optimization project, and that was done over the third quarter. For a large part of it. We are pleased with our production performance so far this year, and the third quarter did see a record production at Antamina, and we do anticipate similar production on a business unit-wide level in the fourth quarter. Before walking through a summary of our operations, I would like to highlight our strong resource position in copper. And between the end of 2011 and the end of 2012, we've grown our resource base by approximately a third, and our reserve position has increased from about just over 6 million tons to 10 million tons during that period as well, and in large part due to QB2. So just, I think QB2 represents about 12 million tons of that 32. But it does show the quality of our resource base and our ability to convert resource to reserve as well. Turning to our operations, and I'll start in South America with Antamina. Teck has a 22.5% interest in this mine located in the Ancash region of Peru. Antamina benefits from significant byproduct credits, particularly zinc, but also from silver and moly. And the cash costs for copper after credits are in the first quartile. The mine does continue to transition towards from copper-only ores to more copper-zinc ores, and that is a slow transition, and that will vary depending on what phase we're mining at the time. But that does have an effect on the C1 costs. And as a result of lower byproduct credits, and as well this year and going forward for the next few years, we do have higher stripping requirements with the expansion. So that is also putting upward pressure on the C1 cash costs, but it is higher production, and it is the right business thing to do. There are a number of capital projects required over the next few years to support the recent increase in throughput rates, and as well as some new regulatory requirements. So we do have some projects on the books, and that includes additional haul trucks, some truck shops for those haul trucks, and a new water treatment plant as well, among other things. The team at Antamina continues to look at debottlenecking alternatives for expanding the mill even further, driving the throughput higher than the design rate of 130,000 tons per day. And I would like to highlight, as shown in the picture on the bottom right, a recent change out in one of the drive components in one of our SAG mills. And this is a major component This change-out has led to downtime in previous years, and this significantly de-risks the mine going forward, and will allow us to take full advantage of the expansion opportunities. Turning to Quebrada Blanca, 2013 has seen a number of successes and continued challenges at this operation. Production and costs have been impacted by various events, but we still are on track to meet our guidance this year, and I've just put up the mid-range. Ore grades feeding both heap leaching and dump leaching operations continue to decline as the remaining supergene deposit is depleted. The heap leaching operation will continue now until the end of the mine life, and that makes the most economic sense. At one time, we were thinking that more material would be going through the dump leach, and right now we're going to be maximizing the heap leach operation, and that does mean that the dump leach will become less important going forward. The current mine life has cathode production extending to 2019, which does require an update to our permits for the longer mine life, and we also need to undertake various upgrades to our existing facilities to ensure they'll last to the end of that life, and we also need to do some upgrades to meet new regulatory requirements. We have made tremendous progress on our cost reduction efforts so far this year, as the operation has returned to profitability, but we're going to have more work to do on that going forward. Grades and the amount of fresh dump material that's available for leaching will continue to decline. And with that corresponding drop in production, we are going to renew our focus on cost reduction, and we're going to ensure that mine remains profitable out to 2019. Turning to the future hypogene project at QB, engineering and procurement activities continue to be ramped down, and we will be advancing that project at a much slower pace going forward for the next couple of years, while we complete our permitting activities. Further early works are on hold after recently completing a new camp facility. We don't anticipate resubmitting the EIA for Phase 2 until after we update our permits for the existing operation. Now, while the timeline for the development of this project will depend on market conditions and the timing of these permitting activities, the earliest construction date is 2016 for the start of construction. Moving to Carmen de Andacollo, production is on track for 2013, but for the last few years we have been mining well above reserve grade, and that is going to come down by approximately 5 to 10% over the next couple of quarters, and basically stay in that range up until 2018 when it reverts closer back to reserve grade. Cathode production will continue into 2014 at similar rates, and basically that'll be a year-by-year extension based on the economics at the time. The concentrator is performing well, and efforts continue on high-energy blasting, which is basically designed to break up the ore in the mine as fine as possible before it gets fed to the processing facilities, and we've had some very good success with that. And between improved recoveries, debottlenecking activities, and a continued focus on cost reduction, the impacts of the slightly lower grades are anticipated to be fairly minimal. At Highland Valley, the operation is also performing very well and has regained some of the flexibility, particularly in the mine plan compared to previous years. Stripping requirements, however, will remain high as we do a 360-degree pushback on Lornex, and that's to access some of the deeper ores in that deposit. While the current mine life does extend out to 2027, we do have some very exciting opportunities that we're looking at for longer-term potential, and I'll touch on that in one of the later slides. But really the main focus of the current operating team is on cost improvement and productivity improvement, particularly with our truck and haulage fleet, similar to in Teck coal. And we're really trying to do that to set up and take the maximum advantage of our new mill optimization project, which is nearing completion. Similar to the Carmen Dandakoyo operation, we're having great success with high energy blasting and our mine-to-mill improvement initiatives, and that's providing some throughput increase, has provided some throughput increase this year in advance of the optimization project coming online. And turning to the optimization project, it is on schedule for completion at the end of this year. We will be commissioning the new flotation facility in the first quarter of 2014. The new pebble crushing facility has already been brought online. That was done in August. And that was combined with some various upgrades to our grinding facilities and lines as well. And those upgrades and the new crushing facility is operating as designed. A couple little tweaks we have to do, but that's pretty normal in startup, and it's operating as designed. The project is expected to deliver, both the grinding and the flotation project, expected to deliver strong benefits, both in throughput and recovery in 2014. A few other major projects are also underway, including the tailing system upgrades, which was recently completed and is just going through the commissioning process as we speak. At Highland Valley, we're also focused on growing the resource, and a multi-stage resource and exploration drill program is currently being executed. We do have a new technical team on the site that's dedicated to testing the boundaries of what really may be possible at Highland Valley, and that's really exciting to see, and I'm pretty excited about it. Our current focus is the Bethlehem Deposit, and there's about 100 million tons of this deposit that was mined back in the 1960s and 1970s. And that's our current focus as a phase one, is to come up with about that amount of material. And we're trying to push that into the mine plan within the next 5 years, and to basically defer some of the lower grade things in that mine plan, and including potentially some material from Lornex, which has higher strip rates as well. So this is a way of potentially adding to the grade, and also deferring strip till later in the mine life. So that's pretty exciting. I'm confident in the team that we have in place, and really looking forward to next steps on that project. At Duck Pond, the operation has successfully transitioned to open pit mining to supplement the underground feed sources, and the current mine life is scheduled to early 2015. After completing a comprehensive exploration program over the last few years, we're now nearing a decision point on an extension at depth with the underground facilities, and that has the potential to add 1 to 2 years, and we'll be making a decision on that very shortly. Moving on to one of our major projects, Relincho. Engineering activities are progressing as planned on the Relincho feasibility study, and we are on track for completion of that study by year-end. The study will consider options to increase throughput with larger grinding lines than were envisioned in the pre-feasibility study, and we also plan to update our resource and reserve estimates early next year. Drilling activities were suspended on the site earlier this year, and we now only have a care and maintenance crew on the site, and there's really no further field work planned at this time. What we're doing is waiting for that feasibility study, and we'll make a determination on next steps at that time. As I mentioned near the start of my presentation, we have a strong resource position within copper, and numerous other projects in the pipeline longer term. We do plan to focus our efforts in 2014, and we are going to reduce our spending levels on most of these projects. The proposed work plans for Galore Creek, Shaft Creek, Mesaba, and Zafranal are currently under review, and we're just going through the budgeting process and proposed work plans right now. And before wrapping up, I'd just like to add a few points. All sites right now are very focused on business improvement and cost management programs. We have about just over 100 million target in copper. A large percentage of those projects and initiatives have been implemented, and the realized benefit is about three quarters of that amount to date. So we're making very good progress in 2013. We're going to look to continue to expand and further leverage off of that progress into 2014. And while we do have some grade declines, in particular at our South American sites heading into next year, we will be driving throughput rates and driving our costs down at all sites. So that will minimize the effect of any lower grades on our copper business going forward. In summary, Teck does have a portfolio of stable and long life assets in Canada, Chile, and Peru in the stable jurisdictions. We have lots of brownfield growth opportunities across the board and a very strong pipeline of projects when we're able to and when we choose to bring those on. So that's what I have for you today, and I'll be happy to take any questions. Thank you.
Great, thanks very much, Dale. We're just going to devote a couple of minutes to questions and then move on. Oscar.
Thanks, Dale. You pushed out Quebrada Blanca to a little bit more. I'm just wondering if you could provide context around what you were seeing or discussing with the authorities with regards to permits. What, can you divide the decision on, or, putting this project later? Is it economic because of the current environment, or is it something more structural within the permitting process in Chile?
Yeah, sure. I'll add some color to that. Right now, our focus is, and we've talked with numerous regulatory authorities, our focus is to get the EIA updated for the current operation. We actually need to do that. That's not going to be a choice of ours. So it needs to be a sequential process. At one time, we were thinking it might be able to be a concurrent process. So we are updating the EIA, which goes back right to the start of QB when it was first built in 1992. Back then, it was a voluntary EIA process. We have been working with the regulators since that time. We've had various updates to the permit, but not as a full EIA. There is avenues in Chile in the past to update the operation with things called DIAs, or it's lesser permits than a full-blown EIA. With new regulatory changes that have come into place over the last couple of years and even more recently than that, we do need to submit a full EIA, and that basically is for the full existing operation. That will incorporate various aspects. We do need to upgrade some of our facilities to meet those new regulations under that EIA, and we'll be making those commitments. We are working with Suriname, the SEA, the DGA, various regulatory agencies in the first region, and have been in contact with them throughout this process. We're currently preparing that submission, and that's going well. It's an open process with the regulators, and we'll be submitting sometime in the new year.
You mentioned, Dale, in your presentation on slide 7 that there would be some further CapEx required simply to extend the current QB1 to 2019. Could you give us an order of magnitude there? And then secondly, as you're progressing and kind of keeping QB2 on a longer timeline, what is the cost to keep moving that project along as well per year?
Right now, we're currently going through the budgeting process, so I'm not going to give out specific figures on those. We're still reviewing those. As far as upgrading the existing facilities for the mine life out to 2019, there are various upgrades that are required, in particular to our primary, secondary, tertiary crusher systems up through the agglomeration drums and basically leading out to our heap leach stacking, and with various other facilities. So it is going to be higher than normal sustaining capital leading into next year, but we're still reviewing those cost estimates, and it's not going to be a huge cost, but it is higher than normal sustaining going into next year. As far as on the QB2 project, it will be significantly reduced from both the budget and actual expenditures in 2013.